Hey everybody, it's been a while since I've done one of these technical analysis videos. If you saw my latest TikTok, which I posted this morning, it's this one, 17% in 11 days. I want to do a longer video, more of a walkthrough to show you why I bought the stock when I did and why I sold it when I did, using various bits of technical analysis. So here we are on the 180-day chart. I like the 180-day chart because it kind of gives you an idea of where the stock has gone most recently. It's not a year chart. It's not a 2-year chart. Who cares what it did 2 years ago? As a trader, I'm trying to gauge where I think the stock might be going in the more recent term. So looking at something like a 180-day chart gives me that opportunity to see some various price points where I might consider entering, exiting, and I'm going to use something called Fibonacci retracements. I'll link below to the video explaining what they are if you don't know, so you can learn. But basically, the way these Fibonacci retracements work is you right-click. By the way, this is TD Ameritrade's Thinkorswim. You right-click on the very top where it says 593. So you right-click right here, and we're going to go to Add a Drawing, and we're going to click on Fibonacci Retracements. Now we're selected. You don't have to be holding down the cursor, and we're going to go to the low. Now you see here the low is $1.20, but when I had this stock on my radar over the last few, I guess today's the 11th, so over the last week or so, I probably dropped my Fibonacci retracement around here, where it was at that time the low. So that's what we'll do. So here we are. Now, the reason I use these Fibonacci retracements is because what I'm looking for is to find a stock that is hanging on support, not breaking below. You know, people tend to take this technical analysis very literally. For me, I use them more of like approximations, a gauge. Okay, it's near the line. Now let me start looking. I'm not like, it's not on the line yet, I have to only buy when it gets... I use a lot of different tools. Fibonacci retracements, I look at the volume, I look at relative strength index, and I make my decision based on all of that. So I'm not so hung up on like, is it exactly on the line? In my idea, it just has to be kind of close. If you're the kind of trader who's only buying when it exactly touches the line to buy and exactly touches the line, the resistance line to sell, you're not going to be making a lot of trades. So if you're the type of trader who gets like so uptight with this kind of stuff, just relax, man. They're approximations, for me at least. So if you wanted to trade the stock in this trading range, you could do away with these Fibonacci retracements. Let's get rid of it. Remove. And you could do this. Add drawing, price level, and drop one kind of around here. And you could do another one, and you could drop it kind of right around here. Hello? Why don't you drop? There you go. And every time you get kind of close to this line, you could start scaling in. And every time you got kind of up to here, which is resistance, which is, it's saying, look, there's interest down here, but there's not enough interest to push the stock higher. So this is where you exit every time. And yes, eventually there will be a time when it breaks this resistance and it pushes higher. Oh well, the goal as a stock trader isn't to be in every single trade. The goal is to establish a pattern, notice a pattern, and then start being able to trade off of that pattern. Short term, when it breaks out, you step back and you wait for it to establish a new pattern, which means that unfortunately you might miss the first couple of trades because you're waiting for it to establish a pattern. So let's get rid of these lines now. Remove, and I'm going to drop my Fibonacci retracements again because that's really what we're focusing on here with this video, and I was kind of around here when I bought. So now what I'm looking for, I notice that whatever day this was, it was the low. So I plotted from high to low. So I plotted my support and resistance lines, my Fibonacci retracements, and then I waited. And what I wanted to see is that I wanted to see this stock consolidate on or around this support line. If it broke through to the downside, started going lower, then I wouldn't make the trade. And I would wait, let's say it dropped down to 90 cents, I would redo the Fibonacci retracements from 593 to 90 cents or wherever it ended up settling. So there's a waiting game here, and it can be a little boring. So now I've got my retracements up here at around in the 130s. And what I want to do is I want to jump into a more recent time frame, like a 10-day chart. Well, let's just do 20 because you can see a little bit easier. So here we are on this 20-day chart. This is where I have plotted my Fibonacci retracements because this was the low at the time at around $1.26. So it moves up, comes back down, hangs on support. This is good. Moves up, comes down, hangs on support. Yeah, it breaks through a little bit. But if you look over here, the volume is like nothing at all. So I am not concerned with this. If we saw big volume, like these blue graphs here, these blue charts here, but in the negative, then I would be concerned. So your follow-up question is, well, it's oversold here, it's oversold here. Why aren't you buying on these days, right? If this technical analysis is supposed to be so good, well, here's a signal. Buy here, buy here, buy here. The reason we're not buying is because the volume is weak. The volume is non-existent. Not only that, but you can see that we're on the negative side for the most part, except for like kind of right here. We're on the negative side of these Bollinger Bands. We're in negative territory. So even though it's oversold, we're still pushing to the downside. We're still breaking out a lot. Break out to the downside, break out to the downside, break out to the downside, break out to the downside. Yes, we do get a breakout to the upside, but no volume. So what we're waiting for is for the stock to bounce off of support a couple times, consolidate, and we're waiting for these Bollinger Bands to narrow. At some point, this stock will become a buy. And, frankly, it doesn't really matter where you get it. Some people are so determined to get it at the very bottom. You're going to drive yourself nuts doing that. It doesn't matter if you buy the stock at 142 and then it drops to 125. Yeah, it's $180 loss if you bought 1,000 shares or somewhere around that range. But it doesn't really matter because it's not breaking out to the downside further. If it does, that's when you cut your loss and that's when you walk away. If losing $180 is too much for you, if that's too much of a percentage loss for your own risk tolerance, then you would probably exit the trade. That happens. If you have a higher risk tolerance and you buy it at 140, who cares? So for me, I bought it on the, when did I buy it? I bought it on, where does it show the dates? Oh, it shows the dates right up here. I bought it on the 28th, and I bought it, oh, look at that. I bought it exactly at 136. So where we are right now, I probably bought it right here. Just thinking, it's hanging on the support line. If it goes below the support line, maybe I'll cut and take my losses. Or if it breaks below and then it hangs out just at a little bit of a lower level, then I'll just redo my Fibonacci retracements down to whatever this level is. As long as it hangs on that support, we're in wait and see territory here. My phone is going crazy. Is something happening? What's happening? Nothing. Everyone needs to shut up and leave me alone. I'm making YouTube videos. So did I buy too early? Right? Should I have waited for it to test this pattern a couple times? Maybe. But for me, I'm an experienced trader. I understand my risk tolerance. I just figured, who cares? I'm going to buy it where I want. I bought it here. The volume was weak. There was probably no real reason, right? I wasn't thinking, oh, we got a breakout or we're crossing this 20-day moving average. This is positive. For me, I was just like, it's close enough to this line. The volume is weak, which is telling me that, even if it does drop a little bit, I think we're okay. And if it did break below and there was an uptick in volume, I'd sell and I would take my loss. So yeah, I bought it at 136 right here. And you can see that it got down to 127. And then it moved up a little bit. And then it dropped down a little to 121. So I'm sitting on 136 to 131 or 121. Medium-sized loss, but I'm again not very worried. Yeah, it broke this support line, but no volume. And it enters oversold territory on the relative strength. So it's telling me that there's enough selling pressure. The selling pressure is over. It was very weak. It's not really a concern. I'm literally just holding the stock and I'm waiting for something positive to happen. The fact that we've consolidated and the fact that we're bouncing off of these support lines over and over, even if we break out a little bit, remember, these are approximations, don't worry. I'm thinking all these oversolds, it's an indication to me that the stock could have a reversal. Could have. And you see what happens today, obviously. That's no surprise since I've been doing this video for 11 minutes and you've been looking at this. You know what happened today. And if you watch my TikTok video, you know as well. So let's see. We have a huge uptick in volume. It pops to around 160, which is where I first sold. I sold it probably right around here on the overbought on the relative strength, which is indicating a sell-off. And if you look at this big, oh, you know what? That's not true. I didn't do it up here. I did it down. Oh yeah, no, I was right. I sold it exactly 160. So this is where I sold. One candle over is this big red one. You can see it drops all the way to 136. So in the moment, I absolutely got out at the right time. Now, you know, looking at this chart, I'm seeing no indication that this could have had a bounce and do what it did. So am I upset? Could I have made a little bit more? Of course. Am I upset? A little bit, obviously, right? I mean, you'd be lying if you said, like, no, I'm not upset. Of course you're upset. The objective here is to make money so you can pay your bills. So a profit around here in the 190s, which is realistically probably where I would have gotten out, is a little bit more money than 160. But I hit my goal. I made 17% on the day. I got out because this big surge in volume and this overbought on the relative strength, that's two technical bits of technical analysis that told me now's a good time to get out. And in the moment, it was the right call. So anyway, there you have it. That's the reason I purchased this stock. It started to hang out on the support line. Maybe I bought it a little too soon because I was feeling like whatever. Usually you want to see something test a theory 3 times as a stock trader. So 1, 2, 3. This is probably where you would have decided to buy if you're a new trader. If you're a little bit more experienced and you think, fuck it, if it crosses below, whatever, I'll just take a loss. I'm just showing you what I did. I bought it right around, I bought it right around here, 136. No real reason, just where I decided to buy. Stock market's closed. If you decide that you're a new trader and hey, fuck it, I just want to buy it here, the most important lesson is to stick to your plan and minimize your downside risk. You don't want to be losing too much money here. So if it had broken to the downside and it really started to sell off, you would cut and you would take a loss. So there you have it. That's how I made 17% in 11 days. If you thought this video was helpful, please hit the bell, please hit the subscribe, please follow me on TikTok. Thanks for watching and have a good day.